Bonds, how do they work in an investment portfolio? Well, some people say, I don't like bonds at all because the interest rates are too low. They don't have a high enough yield. Well, let's talk about how they fit into a well-diversified investment portfolio. Well, what is a bond? Well, when a government or corporation borrows money, they issue a bond and they pay interest. They're borrowing your money. Now, if we look at the different types of bonds out there, there are a lot of different varieties of bonds out there, but you don't need to own all of these different types. Bonds have one purpose in your portfolio, and that is stability. We don't want to go after the highest yield. And, a lot of people say, I want a higher interest rate. No, that's not a good idea a lot of times when it comes to bonds, because we want something that goes up in value if the stock market goes down. And this typically happens because of a flight to quality. When people get nervous about the stock market, they flee to bonds. They drive the price of bonds up, thereby driving interest rates down, and people refinance their debt, and then the economy comes back. So this is all counter-cyclical. Now, a couple types of bonds that are more stable, government bonds would be one example, or high-grade corporate bonds would be another example. Now, bonds can obviously have risks. And number one is inflation risk. Historically, T-bills, which is short-term government bonds, have taken over 100 years for money to double after inflation in these issues. Now, how important is all of this discussion? Well, in 2008, when we had this big market downturn, in 2002 as well, what happened to intermediate government bonds? Well, they actually went up 11%. They went the opposite direction of the stock market. But what happened to a lot of higher risk bonds? Well, high yield bonds, which are corporations that are riskier borrowing money, they went down 25% on average. Municipal bonds went down 9%. That's where governments, city governments borrow money. So these can go down as well. One bond fund went down 78% that was used in 529 plans. So this is a really important discussion. Make sure you own the right types of bonds in your portfolio.